traders, and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bashar al-Assad has landed in Moscow after Islamist-led forces led to a lightning advance through Syria, entering the capital on Saturday evening and ending more than half a century of his family's rule. Now, Assad's toppling comes after more than a decade of war, 600,000 deaths, and the world's worst refugee crisis since World War II.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity for the long-suffering people of Syria to build a better future for their proud country. It's also a moment of risk and uncertainty.
In a moment, we'll get market reaction from Sherry Paul, private wealth advisor at Morgan Stanley Private Wealth Management. But first, let's get more from Bloomberg's Sam Dagger and Ross Matheson, our EMEA news director. So thank you both for joining us. Sam, talk us through exactly what we've seen on the television sets over the last 72 hours. Who is now in charge of Syria?
Absolutely great to be with you. I mean, it's been really dramatic, absolutely dramatic for Syrians and non-Syrians who've been watching this. I mean, as you said on Saturday night, it seems like that's when Bashar al-Assad pretty much lost all hope that his overtures were going to go anywhere, because we reported, we had a Bloomberg exclusive that he had made these overtures to both the Biden administration and even President-elect Trump. But none of that went anywhere, so he is now in Moscow. And then shortly after, the rebels, led mainly by, as you said, the Islamist rebels, led by HTS, which used to be affiliated with al-Qaeda, but has come out and said that it no longer has any links to al-Qaeda and has gone out of its way to assure Syrians, but everybody's taking a wait-and-see attitude. So we have these incredible scenes of celebrations in Damascus. I spent 2 years in Damascus between 2012 and 14. I know this area. This is Umayyad Square right there. It's the main square. The state TV is right there. They took over the state TV building and announced the fall of Assad. Yes, we did see some chaos. We did see some looting. People entered the Assad family home. this was really incredible. This is the home where, the family has lived for half a century, where, Hafiz, Bashar's father, who, let's remember, took power in a coup in 1970 and built one of the most brutal regimes in the world. Underpinned by this cult of personality and violence and repression. And so Syrians were coming to grips with that. But obviously a lot of questions, but at the same time, a lot of smart Syrians who are abroad, people, we're talking about the opposition, because as you noted in the introduction. Yes, go ahead.
Yeah, no, look, you're an expert on this. You also wrote this very important book saying, Assad or we burn the country, one family's, lust for power. So you understand, of course, in minutia, what Syria has been going through. The turning point here is also that Russia could not really get involved. So what does this mean for Russia and Iran losing power in the region?
Excellent. You could say Iran is for now, completely out. Russia has been weakened, but it still maintains its air base in Latakia, which is on the west coast. It has this naval base in Tartus. Russia has had this base for decades. But I would say that Moscow now is going to work with Turkey. Turkey is the main player now on the ground, at least on the rebel side, right? So you're going to see the Russians and the Turks working a lot more closely. And now, obviously, Israel is now that Iran is out, Israel is asserting itself, in a big way, because it does have major concerns. It has concerns about who these people are. As you said, there's a vacuum. It's worried about what's going to happen to a lot of the heavy weaponry and also chemical weapons, potentially. We don't know if there are any chemical weapons left, but this is a concern.
Sam, thank you so much for, of course, all of your insights. We'll continue keeping a very close eye on the story and go back to Sam Dagger for expert analysis. Now, let's also bring in Bloomberg's Ross Matheson, and then we'll talk markets with Sherry Paul. Ross, first, I mean, when you look at the wider implications, what does this mean for the Middle East, but also China? It feels like the world is being redrawn almost on a monthly basis.
Well, right, as Sam was just saying, you've got the chessboard in the region. You've got a lot of questions now about the role of Turkey, of Iran, of Russia, of others. Also the US, of course, with a change of administration coming there. I mean, Donald Trump was very interesting. He was out commenting on Syria well before the White House was, and he was making it very clear he didn't think it's something for the US to get involved in. In fact, he also wants Vladimir Putin focused more on Ukraine and getting towards a ceasefire and talks on Ukraine. So very much a clear message from Donald Trump yesterday. But you've also got China in all of this, because Xi Jinping and Assad, they've had a close relationship for some years. Assad's visited China. China exports the most to Syria of anybody. They're a key partner for them economically. I mean, Syria doesn't export anything to China, but China has operations there in the oil sector as well. They want to be preserving their business interests there, their economic interests there. You can see from the Chinese today commentary very much this is a matter, again, for the Syrian people, hoping for a peaceful transfer of power, but very much they want to be securing their business interests at the same time.
Ross, we know that President Xi and President-elect Donald Trump have spoken on the phone. I mean, how's China getting prepared for tariffs? We saw this massive stimulus today. Will that be enough to counter it?
It was very interesting to see this announcement today. I mean, it partly reflects their concern about their own economy. They need to juice their own economy, and you've seen some steps in the housing sector and so on. It's not really driving demand, and what they're signalling with this language, changing language, you know, for more than a decade, very much on the loosening side, also signalling very more proactive steps. And what that does, it cracks open the door perhaps for the NPC, the big meeting early next year, for them to bust the deficit rules. I mean, they're basically saying, paving the way to be able to blow through their own deficit rules. That gives them space to spend more, and that's about their own economy, but it's also about shielding the economy in the event of further tariffs from the US.
Ross, thank you so much. Let's also bring in Sherry Paul, a private wealth advisor at Morgan Stanley Private Wealth Management. Sherry, so good to speak to you. I'm not going to lie, the concern is that there's so much geopolitics that's not really filtering through the markets. I mean, how many of your clients ask you about, you know, again, a never-changing world, if it's not impacting asset classes?
Yeah, thank you. Well, look, the geopolitical environment sets the tone for the conditions in which we're investing. As a senior portfolio manager, my responsibility is to find the corridor of opportunity in all market conditions. And in this case, I'm really encouraging clients to have the awareness of the geopolitical situation, but the thematics that are enduring, that underpin growth and earnings, is what will drive this market higher, which is why we're remaining very U.S.-centric in our investing right now. But that's the most important thing.
How much do you watch China? Again, today we had, you know, the start of monetary stimulus, which actually the Chinese policymakers probably didn't want.
Well, look, you know, it's hard to kind of have your cake and eat it too in China, in terms of if you want to have transparent and liquid markets. Along with stimulus, with a slowing economy. The bigger issue, I think, is whether or not there's a role for China right now in portfolios. And if anything, I think that that's more of a signal that the thematic that investors need to embrace is the reimagining of global world order and its impact on supply chains, and what that means in terms of who the winners and losers will be in terms of balance sheets that can support that reimagination, because it's expensive and that would weigh on earnings, which is also why we continue to favor the big cap space, because they've got the balance sheets to reimagine that.
I mean, Roz, over the weekend it was pretty incredible looking at, you know, the Notre Dame pictures with all the heads of state, Donald Trump showing up with Elon Musk. I mean, is he actually starting to talk policy on tariffs?
Well, Elon Musk or Donald Trump, or both, possibly, on tariffs. I mean, it's interesting. Donald Trump has again last week raised the questions around tariffs on Canada and Mexico. The question is, what is he using that as a tactic for? Is it a tactic to get agreement? He's used migration and drugs on the one hand. He's saying you countries need to tackle these things or I'll put tariffs on you. So he's using it as a political tool, not, you know, as a purely economic tool. Is he doing it now before he gets in office so that these countries will come and say, OK, we hear you, we'll do this on drugs or migration, and then Donald Trump can claim the win? But it does seem that he's very much attuned to the idea of just using tariffs at a moment's notice too, by the way. I mean, he could just wake up one morning and decide, today I feel like putting X tariffs on French brandy again or something, or steel in Europe. And that's the uncertainty that he keeps people going on, but very much using this as a political tool. He's shown that before he gets in office. The question is, does he actually enact it once he's in?
Yeah, and that's $1 million question for the markets, Sherry. Yeah. Are we going to get a lot of volatility when it comes to some of the emerging markets, or are we going to see countries like China trying to preempt by making sure that their economy is more solid?
I think the answer is both, which is why we should all expect increased volatility going forward over the next year. I think at the centerpiece of this, though, is also this acceleration of AI as a solution set for slowing economies around the world, as this productivity enhancing cost reducing technology. It has an equal, opportunity installation if business models are willing to take it on. It also deals with, the politics of human labor around the globe. And so I think that we see this geopolitical conflict be the accelerant for the adoption of more AI-centric manufacturing, much like we saw, I think, the pandemic push people into what I was calling the remote of everything at that time. And I think that will allow the markets to continue to sort of defy what so many people rightfully would understand as a really difficult investing environment. The thematics are just too strong.
All right. So thank you both for joining us. Sherry Paul from Morgan Stanley Private Wealth Management stays with us. And thank you, as ever, to Ross Matheson. Now, a couple of other stories we're keeping an eye on. Omnicom reportedly in advanced talks to buy Interpublic in a deal that would create the world's largest advertising firm. Now, the Wall Street Journal says the all-stock transaction would value Interpublic at between $13 to $14 billion. Now, coming up, we'll have plenty more, of course, on the U.S. We'll also talk banks. UBS Chief Executive Sergio Ermotti says rising tariffs and global conflicts could increase risk in financial markets next year. We'll drill down to see exactly where that risk could be. This is Bloomberg.
All these geopolitical events haven't really triggered any more chain events and consequences, also in financial markets. So that's positive. So I think that but one cannot be complacent. The acceleration of geopolitical events coupled with potential escalations on the macroeconomic front, tariff. Protectionism, it's definitely something that has to be watched. On the other end, we still see consumers and the economy quite resilient despite all these challenges.
Well, that was the UBS Chief Executive, Sergio Ermotti, speaking to Bloomberg at the Abu Dhabi Finance Week. Now, still with us, Sherry Paul, Private Wealth Advisor at Morgan Stanley Private Wealth Management. Sherry, I have 1,000,001 questions, not only about U.S. I mean, this is clearly where the smart money is moving to, but valuations are probably stretched. Are they priced to perfection?
Well, not necessarily, because really, if you kind of break apart, the trick right now is to break apart the S&P 500, because if you take out the top 10 companies, the PE ratio of the market itself is around 19 times earnings. And frankly, if we're looking at price to earnings ratio, I'm really encouraging investors to add an additional letter, which is the I for innovation, which is the premium that investors should be willing to pay in this sort of not-to-miss industrial revolution, which is why we're seeing tech outperforming communication services and other beneficiaries of, the installation of AI.
But, Sherry, does it have to be U.S. also because of, Trump policies, meaning that there's going to be a lot more reshoring, or can you find opportunities elsewhere in the same industries?
Yeah, no, great question. Well, I think that right now the innovation drivers that are producing earnings continue to sit within the United States. And so so while, for example, here in Europe, I've always been an investor in our client portfolios to some degree in Europe, but my biggest concern, and I think all of our concern for geopolitical stability should be whether or not Europe actually goes into a recession, while the United States has soft landed and stays out of a recession. And if you couple that with a slowing China, then you have 2 out of 3 biggest contributors to global GDP going into recession. That could press things. But one point about that, though, is that just because we get into geopolitical conflict or slowing economies, money doesn't just disappear off the planet. It finds a new home. And so active rebalancing, both at the geography level, the market cap level, and then crucially at the sector level, will be the key to performance, particularly in the U.S. markets, because we've had winners and losers not all performing in an equal basis over the last few years in the bull market that we've been in.
But how much of that money is going to private markets? I mean, we've seen, if you look at, the charts, it's actually incredible over the last 5 years.
Yeah, it is. Well, yeah, and I mean, I think that makes a lot of sense if you can access the private markets. But look at how much return we've been able to produce in the public markets with these incredible companies that are leading the way to a new way that a new industrial revolution in terms of how we will operate and how businesses are going to manufacture. It's huge.
Some of the things I know you're also watching for is policy swings, including deregulation, taxes. Again, deregulation, is there too much, I guess, of a Trump trade on the positive side? That actually, if you deregulate, or even if you put tariffs, it comes back to bite you in terms of inflation back home.
Yeah, thank you for asking that, because I really like to separate the two. So there's policy volatility, and then there's earnings-driven volatility, very different. So, yes, we should see a premium in the market for policy-driven, because the trade, it's a trade. Deregulation, are we going to or are we not, versus earnings momentum in a company that's actually growing shareholder value. But, obviously deregulation would benefit, small and mid caps and big caps in certain sectors in the U.S. But the tariffs, kind of like, are the backdrop of that, which would be fundamentally inflationary at a time when Americans in particular voted around their perception of inflation in the United States. So I think that would be very tricky.
Sure. You also like healthcare.
Yes. Yeah.
In the U.S. or globally?
Well, in the U.S., and right now it's actually one of the worst performing sectors year to date. I think it's up 9 to 10% against some of the other sectors. But I just remind investors, too, that, in January of this year, financials, which I was overweighting at the time, too, in our portfolios, was also a worst performer until, it had an accelerant. I think that will be the same in healthcare. Plus, you get a good dividend. It's a nice PE setup, and it's a good rotation out of tech. To bring lower volatility and greater stability to client portfolios, is particularly for people who are looking for income and just don't have the stomach to tolerate the swings that we're having to endure to get to those returns in this market.
So interesting. Sherry, thank you so much for joining us today. Sherry Paul there, Morgan Stanley Private Wealth Management. She's also here for our Woman, Money and Power Conference, which we'll tell you more about that shortly. Coming up, South Korea's president has been banned from traveling overseas, while multiple probes are underway into his declaration of martial law. We discuss that next, and this is Bloomberg. Well, South Korea's Justice Ministry has banned President Yoon Suk-yeol from traveling overseas due to ongoing investigations into his brief declaration of martial law. Let's bring in Bloomberg's Katya Dmitrieva for more. Katya, what does this signal about what may be to come?
Well, there's a lot happening behind the scenes right now, and this is probably one of the clearest signals, that the pressure is really growing on President Yoon and on his party to do something. And that something, according to protesters and according to the main opposition party, is to leave office. Right now, it's looking incredibly unstable, both the political situation, but also Yoon's own position in government. Currently, they're having discussions, and then behind the scenes, as I said earlier, there's a lot happening in terms of what the opposition party is planning and what Yoon's own party is planning. So Yoon's party yesterday said that for all intents and purposes right now, the president is not actually making decisions. It's the prime minister as well as the PPP, that's the ruling party, Yoon's party, is currently making decisions. But that's not really been enough so far for the Democratic opposition. They're looking to impeach Yoon, and they'll be holding a vote on that on Wednesday. But certainly things are rapidly developing up until, the next 48 hours and that crucial vote.
Katya, thank you. Katya Dmitrieva there on South Korea. Coming up, our exclusive conversation with the Audemars Piguet chief executive, Ilaria Resta, on the demand for Swiss luxury watches and her first year in the job. That's next, and this is Bloomberg. good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua in London, and these are your top stories. The world is on watch for more upheaval in the Middle East as the fall of Syria's Bashar al-Assad creates a power vacuum. Now, Israel moves troops into Syrian territory while U.S. airstrikes hit ISIS targets. A boost for Chinese stocks as Beijing makes its first major shift in monetary stance in 14 years, also vowing more fiscal support. And South Korea's president is banned from overseas travel as a series of probes emerge against the embattled leader over his brief declaration of martial law. Now to a little bit of luxury, and Swiss watch exports are on track to post an overall decline this year for the first time since the pandemic disrupted sales in 2020. Now the industry has boomed in between, but is now feeling the pressure of higher rates, probably a strong franc, and wars in Europe and the Middle East. Now, my next guest is the highest-ranked woman in Swiss watches, I would say watches in general. Ilaria Resta became the new chief executive of Audemars Piguet earlier this year, following 2 decades of consumer goods giant Procter & Gamble. Now, analysts say her mission is to stabilize the brand and capitalize on its transformation from a watchmaker to a luxury house. Well, I'm delighted that Ilaria Resta joins me now. Thank you so much. Welcome to Bloomberg and welcome to London, Ilaria Resta. When you look at some of the challenges ahead, how's it going? You've been in charge for a year. There's things that you wanted to do. Are they at speed?
Yes, they are at speed. Of course, as soon as I joined the market, new reality hit, which is in a way a blessing in disguise because it gave me the chance honestly to focus on the strategies and rethink about the growth opportunities moving forward and stabilize this business before continuing the growth.
Ilaria, when you look at your main markets, I know China was a big one with a lot of question marks today. We have stimulus. The U.S., the biggest, of course, market for watches. How are those going?
We are very well balanced in terms of presence by market, so we are not affected by the downward trend in China. We're actually very well spread by country, by region, so we continue a solid growth. We're very happy about what we put in place for the future. So far, we are not affected by the macroeconomic instability.
I mean, the waiting list, of course, for a watch is huge. Does it mean that as a customer now, I have a shorter list to get the watch I want?
We continue having high demand, and we continue, luckily so, continue proceeding with our production strategy, which is highly manual, highly elevated in terms of horological signatures. So we try to push more complications. Because of that, of course, it's a long process of production, and it takes months, if not years, to develop a new watch.
Ilaria, you almost came as an outsider to the watch industry. What have you learned over the last 12 months?
Well, definitely an outsider. I've never worked in this industry, and it has been a wonderful discovery. Definitely is a different dynamic from the FMCG world where I come from a publicly traded company, and now work in a family company with a different governance. But definitely the common points are the leadership needs, the value creation work that I have to do. Of course, it's a completely different time horizon. Producing a watch is a very, very long investment in time. Sometimes it takes even 10 years to develop a watch. They're quite the opposite of FMCG dynamics.
How many watches do you make? Around 50,000 or 51,000?
That's pretty much where we are.
Will it pretty much? I mean, are you trying to increase that, or actually is demand so important, or is the scarcity of it so important that you'll stay around these figures?
It's not about the scarcity. It's about our strategy of production and manufacturing, which is focused on elevating the complications and the innovation of watchmaking. That's why we focus much more on research, and these activities require time. We want to continue doing what we used to do in the past 150 years ago, which is developing and advancing horological invention, and high-end, high complications are important in the mix of products. So we are complicating more our portfolio.
And so what's the magic in that? Once you have the product, is it how you sell? Is it influencers? Is it, you know, you have the brand is very well known and also inside rap music, which has given it an extra leg upwards?
Well, it starts from the watchmaker. When you go to the bench of a watchmaker, you feel the passion and the emotion of the watchmaker passing this passion and emotion in an object, in a timepiece. And it's incredible how this emotion can travel all the way to the final client. And that's why we're very happy to have a direct distribution, because this allows us really to tell stories and to explain what it takes for that specific watch to end on the wrist of our client.
How much do you want to diversify? I know, for example, there's still plans to boost sales of the code 1159, but you have the Royal Oak really dominating the sales.
We want to diversify, first of all, from a client standpoint. We are underdeveloped among women, which is an industry phenomenon. And now we see women actually being more and more interested in mechanical watchmaking and high-end mechanical watchmaking. We are breaking the bias that women are much more interested in jewelry watches or quartz watches. In reality, they are extremely interested in mechanical watches. They are becoming collectors. And by 2030, we estimate that 45% of buyers will be women. And they will buy themselves and build themselves their collection. So no longer the stereotype of the man buying watches for women. So we are trying to cater to women, cater to new generations of clients, and hence our portfolio will be adjusted to these clients.
I mean, does a female buyer shop differently, for example, in Switzerland or France compared to the US or China?
That's what we're indeed analyzing and studying. There is a different retail environment and ceremony that women are looking for. They love actually education, so that's why we're organizing masterclass for women to go behind the scene of developing a watch. We put actually watches in their hands. We dismantle with them just to show what the mechanical movement is. And it's incredible how much they are very interested into the mechanical elements of watchmaking. So we're moving much more into storytelling than selling, real workshop, hands-on activities with women, but also with new generations.
Ilaria, I mean, there was this report from Deloitte showing actually that the watch industry was failing to make and market watches that women wanted to buy.
Yes.
I mean, do you have a percentage of sales target that you have towards women? How much do you sell to women now, and how much do you want to sell in 5 years?
We are in the range of 20%, pretty much like the market. We aim at mirroring the market reality. We don't want to be behind the market. We want to offer women the watches they want. The starting point has been not listening to women from the entire industry. I think there were so many stereotypes that we are trying to break. And also it's important that we stop separating the market between women watches and men watches, because this is not the way women think about the category, nor men, by the way.
Rolex, I know, is making big inroads with certified pre-owned programs. Will Audemars go the same way?
We are working on it as a service for clients. It's been a while. We have been working on this program, and now we will be ready in 2025.
I mean, there's also a lot of, speculation, or at least talk about Bashar movement and the fact that there could be a consortium. This is a Swiss company that makes some of your movement parts. I mean, would you like to be involved? Does it make more sense for, a watchmaker to have in charge of all the supply chain?
What matters to us is that we ensure that the industry is well served by our suppliers, and we create an ecosystem where we can be codependent. We have always worked in Switzerland with this system of établissage. That's how Audemars Piguet was born. We were at the center as a project manager of watches and working with different companies, families, sometimes expert in specific movements. We want to continue to have a healthy balance of partnership with external. At the same time, we need to start owning and mastering also the production of some elements. Like ceramic, for example, is an important material for us that we start producing ourselves. But we believe in the balance of external internal capabilities.
Ilaria, when you look at, every day we talk about geopolitics and, the Trump tariffs. Does it impact a company like Audemars?
We don't see this impact after the election in the U.S. At this stage. U.S. continues being the biggest market, and the one actually that even in 2023 has posted the strongest growth. We have high demand. Also, given our relatively small size, we are not so affected by geopolitical fluctuations.
So what's your biggest problem solving? I mean, over the next 12 months, if you look at your 3 priorities.
My priority is, first of all, ensuring that we set the foundation. I set the foundation for this company to thrive and live for the next 150 years as an independent company, because we want to remain independent. And to do so, innovation and research is critical. We need to continue being ahead of the game. There is another pillar of the strategy, which is client centricity. You have seen it, women on one side, the new generations. They all come with a completely different approach to retail, to purchasing, but also to type of watch they want, dimension, complications. So we need to be listening, and then sustainability is becoming more and more a topic also in watchmaking, and we need to be ahead there.
When you look at the independence of the brand, again, the rumors about LVMH or other big companies taking an interest in Audemars, do you think the family would ever sell?
No. We are really committed to remain an independent company. It's part of the DNA of the company. It's thanks to this independence that we are able to do the wonderful timepieces we do, and being a focus in Le Valet des Joues, which is our cradle where we started. We want to guarantee also certain continuity of way of doing business and timepieces. So we are committed to that.
You've been in charge for a year, and that means, of course, changes as you brought in new people. Are you halfway there, 90% there of the team that you want to have built?
90% there. The team is almost complete and ready to start. But I am also very glad to have a wonderful equipe of watchmakers in manufacturing, in other departments that are very solid. They have a wonderful team that supports me.
Do you have a favorite watch? I don't feel like I should. I don't know if it's like asking if you have a favorite child.
I have a favorite, and you shouldn't ask, because it's true. It's like children. Today I'm wearing a code, which is actually a watch that a model that I really, really love. But my favorite complication by far is the perpetual calendar.
Okay. Perfect. Thank you so much for joining us, Ilaria, Resta there, with all the incredible movements that Audemars Piguet has to do to make some of these watches, the chief executive there of AP Watches. Coming up, Eurogroup finance ministers convene in Brussels today, with geopolitics, of course, dominating the agenda. Our exclusive conversation with the Portuguese finance minister, Joaquim Miranda, is next. This is Bloomberg. The EU has welcomed the fall of the Assad regime, with Ursula von der Leyen calling the collapse a historic change. Meanwhile, Eurogroup finance ministers are meeting in Brussels, with global political tensions at the forefront of discussions. Well, Oliver Crook joins us with the finance minister.
Yeah, Francine, it's a really, really interesting time to really be talking about budgets and the finance ministries, because it is what has brought down 2 of the largest governments within Europe, whether it's Germany or France, and even the sort of debate over in South Korea also had its source within the budget. So there's a lot of problems to deal with. So I'm very pleased to be joined by the finance minister of Portugal, Joaquim Miranda Sarmento. Thank you so much for taking the time.
Thank you.
So listen, I'd like to start on the issue of Syria, because just of what happened over the weekend. I know it's not directly in your sort of control, but are you concerned that this might mean a more sort of refugee influx? You also potentially could have more coming from Ukraine, and that sort of finance ministers need to potentially budget a little bit more money to deal with that problem at a time of fiscal strain.
Well, first of all, we have to be happy with the overthrow of a dictatorship regime like the one in Syria. So let's wait to see how this new regime works. Let's see how it is able to bring back Syrian refugees. We are expecting to see what will happen. Obviously, if more refugees come to Europe, that will pose a new challenge, like it happened a few years ago. But for now, we're basically waiting and see what the next weeks and months will bring us on that area.
And a lot of the focus for the investor community here in Europe has been on France over the last couple of weeks. This has, of course, not has been crossing your desk, I imagine, as well. How concerned are you over the prospect of potential spillover? Because traditionally in Europe, it has been the periphery that maybe is a cause of issues. Now it's the core that is threatening potentially the periphery.
Well, I don't think there's any danger of spillover. The core of the European Union and the core of the Eurozone is very strong. The European Central Bank has now a different mandate that it had in 2009-10 when the sovereign debt crisis began. We also have the European Stability Mechanism, and all of us have learned substantially lessons about that other period. France obviously has a government problem, a problem of governability.
Yeah.
It has a fiscal situation that is very demanding, with the deficit probably above 6% of GDP and public debt increasing. That obviously creates pressure in the Eurozone, creates pressure in the country itself. I'm confident that the French will be able to find a political solution that could bring stability to that country, that could bring the reforms they need, not just for fiscal consolidation, but also to boost productivity and economic growth.
Yeah.
But the Eurozone is very strong. We have the mechanism, we have the instruments, we have the institutions. And I think there is no substantial danger over the Eurozone as a whole.
Yeah, and we have so many topics to deal with. Another one I'd like to deal with is the topic of trade. We had this sort of signing preliminary of Mercosur over on Friday. Is Portugal, broadly speaking, supportive of this trade agreement with Latin America? And what do you think needs to change? Are you concerned about it being blocked by, say, France?
Well, we're very optimistic about this agreement. We have strong ties with South America, first of all with Brazil, who speaks Portuguese and has been a Portuguese colony for centuries before becoming independent. We also have strong ties with all the rest of the Latin American countries. This agreement, every trade agreement, when it's based on a fair trade, is positive for all countries. It will improve the conditions of consumers, that will be able to have access to more products, and more competition always bring better benefits to consumers. Firms will have to adapt. Firms will have opportunities and risks, like every agreement. But at the end of the day, if we're able to assure that this is a fair trade for all parts will benefit from it.
I think that the concern, though, as I'm sure you'll be familiar, is that something like to what happened with China on industrial could happen with agriculture for the Europeans, where it's a place that has lower regulatory standards, lower sort of costs of labor and those sorts of things could then flood the market. Do you think that there's going to be a satisfactory resolution to that? Do you think that France and potentially Italy, Poland could block the deal?
Well, economic theory shows us that when these agreements are based on a fair trade, everyone benefits. Obviously, regulations and rules are very important. Everyone from South America or other parts of the globe who wants to sell in Europe will have to accept our regulations and our rules and our standards, and the same will happen with European firms selling to other parts of the globe. At the end, I think it will benefit, like all trade agreements before, have benefit generally population.
And in terms of, because there's the sort of globalizing aspect of this trade deal, there's also the deglobalizing aspect, potentially, of Donald Trump and the possible imposition of tariffs into Europe. What is the conversation you'll be having with finance ministers about what Trump's impact could be on the European economy?
Well, from my point of view, again, our talks with U.S. should be on how can we regulate trade, how can we not impose tariffs that will hurt consumers, especially the ones with less income. Those are the ones that will suffer more because they will have to buy products with a higher price and probably lower quality. So the discussion with U.S. has to be how can we make the trade agreements more robust, how can we make them more fair, and how can we complement what our two different economies need. We have problems in terms of energy, in terms of some technological products, agriculture, but U.S. also has some needs. So I think at the end, it will always be better to cooperate than to have unilateral decisions on tariffs.
And one of the big questions before European finance ministers right now is the question of defense, and there's a lot of debate about how to get that money mobilized to industry in order to build up industry within Europe. Are you in favor of potentially collective debt, joint debt, in an effort to do that, to front load some of those investments?
Well, first of all, countries need to robust their defense systems, and in the medium term to reach the NATO target of at 2% of GDP spending being on defense. But if European as a whole needs to increase their defense expanding especially because of Ukraine, whatever happens next year in the Ukraine, and we all hope that the war could end as soon as possible, a strong increase in the need for financing for investing and spending on defense, we'll have to have a European joint solution in terms of coordination and in terms of financing. So we have also learned a lot of lessons from the pandemics, and those lessons are useful for the new risks and the new challenges that we face ahead, especially the ones related with defense.
And very quickly, when will Portugal hit its 2% target of NATO?
We have a commitment for 2029.
Okay.
We hope to fulfill that commitment, and if possible, even to move faster through that limit.
Well, Joaquim, Miranda, Sarmento, thank you so much for
Thank
your
you
time
very much.
today. We really appreciate it.
Thank
Francine,
you.
I'll send it back to you. Dealing with many of the issues that the Europeans are facing now, from defense to possible migrant flows, and of course, that stability at the very core of Europe and France.
Ollie, thanks so much. Oliver Crook there with a fantastic conversation in Brussels with Portugal's finance minister. Plenty more to come, and this is Bloomberg.
I can't guarantee anything. I can't guarantee tomorrow. But I can say that if you look at just pre-COVID, we had the greatest economy in the history of our country. And I had a lot of tariffs on a lot of different countries, but in particular China. We took in hundreds of billions of dollars, and we had no inflation.
President-elect Donald Trump there speaking about U.S. tariffs on NBC's Meet the Press with Christine Walker. Now, Donald Trump says on his first day in office he will pardon the rioters involved in the attack on the U.S. Capitol on January 6, 2021. Well, Trump confirmed the news in an interview with NBC's Meet the Press, his first network TV interview since his election victory. Now, Trump's comments follow President Joe Biden's decision to offer a pardon to his son, Hunter Biden. And New York police have released new images of the suspected gunman in the killing of health insurance executive Brian Thompson, including one of him in a taxi that he used after the shooting. Investigators say the suspect hailed the cab on the Upper West Side of Manhattan soon after the attack, heading to a bus station to leave the city. Now, here's what to watch out for this week. We have the Eurogroup finance ministers today, Tuesday. Tomorrow, I'm really looking forward to our special conference on women, money and power conference. So we'll be speaking to Jane Fraser of Citigroup, Jenny Johnson of Franklin Templeton, and Anna Butin. This is Bloomberg.